I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go ask Slim.
Hi, I'm Steve Miller. Call me Slim. And this is the Slim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market continued its ride this week to previously unknown levels. Investors continued to buy right into the holiday in really light volume through this week. And it started out pretty strongly overall, as Monday we saw the U.S. and China call a truce on the trade war. Trump lifted the ban on Huawei also, and the way I look at it is he blinked. In poker terms, which I play all the time, he got caught playing the weak hand, or at least his opponent had a stronger one, and that round, we would say, did not really go to the U.S. Not wanting to look weak, the president did threaten the EU with $4 billion in tariffs, but we don't know if that's where that's going to go. All in all, the tariff situation might have at least have China looking at what they do, but I don't really see much changing there. And tariffs, in my opinion, are just not the way to go. Let the free market shake things out. So I haven't been behind any of that anyway. The stock market has been feasting on bad news, and bad news is good news scenario is where we have been. And the proof of that may be on Friday when good news came and then the markets turned down. Actually, we had rates pop pretty sharply, and the employment numbers, which came out at 224,000 jobs created, much bigger than the 160 expected. So interest rates popped. The bond market broke, 30 years down about 2 points on the day. Very big decline, and the dollar moved up and gold moved down. All those pretty much moving in line with how you would expect. That brought sellers in the stock market. We think that's temporary, actually. And, one little piece of good news is not likely to change this atmosphere. And eventually it'll get there. The stock market will get high enough where there's no more oxygen up there to support it. And then what happens? The rally dies. But in the meantime, it's going to keep trying to leave the stratosphere, as we have seen. There's plenty of negative news still out there, like slow economies everywhere. And we see that in German factory orders, which were extraordinarily weak. And Samsung coming out and guiding lower and talking about the slower handsets and chips. Chip stocks all reacted in a negative way to that. So again, the bad news is good news scenario, I think, is still here. Our analysis has been good, really good lately over these last several months, and that analysis says the peak's not here yet. Momentum strong in everything we look at, positive patterns in everything we look at in the stock market. And the first target was to get to new highs, and we got there. And next, it's the S&P 500 getting up to 3032. That's really the target that we see as the beginning of the area that could bring a top in the market. And we don't really see that coming until sometime later in the summer. We think that it'll give its first shot at it by late July or sometime in August. But overall, we will see only shallow declines and a market that will continue to feast on bad news, the potential for worldwide stimulus. And that's where we are right now. And that's what's been lifting the stock market. And we don't really see that going away. Stocks, mixed, we'll call them, for the week, only because the Russell was a weaker index and eked maybe slightly to the downside. NASDAQ much stronger, up over 1%. And now we have the Dow and the S&P 500 up fractionally. That's as we get here into the midday period on Friday. The bond market, 30 years, down about 2/3 of a point. That all coming on Friday as the 10-year yields pop about 5 basis points on the week. We had looked for this to be the beginning of the period of an increase in interest rates. Based on the work that we showed in Future Speak on last Wednesday. You really should watch that, where we look at 6 segments of the futures markets. We look at 24, 25 different futures contracts and do some very deep analysis there, and that is basically our most popular show that we do. So that's a level 2 product, so you can become a level 2 member and get all this great special stuff that we have coming up. I'm going to talk a little bit about a special that we're starting next week for our new level 2, which includes our stock index report daily snapshot, which is just fantastic. I'll tell you a little bit more about that in a little bit. Gold market loses about $14 on the week, and that $22 on the downside on Friday. It was worse than that, and that comes, of course, as the dollar tick up and yields tick up, as money then flows essentially into the dollar, which is negative for the gold market. As yields go up, money looks for ways to get a higher yield, and that's why the money flows into the dollar, and that's why we saw the very large pop that we saw on Friday, and good gain on the week as it gains about 1.3% with yields moving up. Oil moves down about $1, and it comes into the buy zone, which we're going to show you that buy zone in just a little bit in the short-term view also. We'll be right back, and we're going to give you the best and worst stocks for the week. All right, for the best and worst stocks for the week, we're going to look at 5 different stocks that I think are strong patterns or strong opportunities that had good gains for the week. First one we're going to look at is Delta in the airline category. Delta had a nice gain, and it came out as they gave some positive news, and that did help the group. Here's the Delta pattern, and you can see in there the gains about 3% on the week. And it was better than that, but now pulling a little bit down here on Friday as the market retreats. Now, this is cycle analysis. This shows you our phasing in here also. So on the bottom are cycle brackets, in case you're not familiar with this. That helps us as a guide only as to the rhythms in the market. Cycle analysis identifies the rhythms, or as they say, the heartbeat of the market. And cycle analysis does give you a feel of the market like you probably will not get from any other style of analysis. You can take our workshop on that by just going to the website and looking under workshops, and you'll see 2 there. One of them is Cycle Analysis Workshop. You can see in here each of these bigger cycles. They're made up of 2 minor cycles that you can see clearly right in here. That's this cycle right here and the second one right here. When the second one joins up with the dominant pattern, you usually get some pretty big declines. You could see that here and here and here and here. Then it set up the next rally. You can see that. And now we're probably getting into this area where it's going to tick down a little bit for the next few weeks, but then we think it'll be moving sharply up again. The stock very likely to surpass that 61.32 high, and I think a little bit of a dip in here, and you'll be getting an opportunity to buy it. So strong guidance that they gave, that really did help the group. And let's just look at one more stock in the group that I think has got a very decent opportunity for you in here, and that is SAVE. That's Spirit Airlines. Now, this one you can see has got a more negative pattern on the bigger pattern, and that is this cycle right in here, which bottomed here and then bottomed over here. that is a what we call a negatively configured cycle. So it's the second low came below the first low. That's not good. When it becomes above the first low, as you could see right here, then you get big upward spikes. But in the meantime, the probability is high that it's going to get into the resistance zone here. So that's between this area 53 and 55 and a half, 56. So we think this is an opportunity to get a gain in here. This high probability that you're going to get into that zone. So we think a positive bias for the near term is warranted. Southwest Air, LUV, also has good upside on it based on what we see in the pattern. Switching over to the gaming stocks, the numbers out of Macau are getting better, and there was a Barron's article written that said Macau was in a comeback. That helped lift the stocks in the gaming category. Now here's Wynn, and this has been a positive base that's formed in here. And it got into this lower buy zone right over here and then turned up. Beautiful pattern that you can see, and it's been moving up, and now it's past the 61.8%. This nice gain in here of about 6% on the week. We think that it could stall here at the 141 area. That's about 8 points higher than where it is now. And then again, it could get up and test this level at 151. So we think there is a lot of time left in the rally, 1 to 2 months at least. So this stock, given any kind of a buyback, any kind of a pullback, I think it's a buying opportunity. I want to show you the daily analysis right in here. And you can see this is an extraordinarily bullish pattern. First of all, note in here where the slim ribbon turned negative, how the stock collapsed. You can see that. Note here where the slim ribbon turned positive, the stock screamed on the upside. Well, it turned positive right here and gave this big upside gap. And if you understand the cycle analysis, there's only a few days of pullback left in here before it begins to move up again. So this to us is an extraordinarily bullish pattern, and we think that pullbacks here in Wynn are a buy. We think that buy Wynn and you'll get a win. Same thing for LVS, Las Vegas Sands. There's your daily pattern right in there. It probably has just a little bit more time to pull back, but I think it's going to soar on the upside after that. And if you look at this pattern, so it's gotten into this upper resistance zone. But with this very strong base that's built in here, we then see that there's a potential for it to get up here to that cycle peak resistance around 69.5. So right now you can see that gap in there. We're looking for it to get to the top of the upper resistance at least. That's another 5.5 points on the upside, and potentially up to that near 70 number. So this really warrants a positive bias when you look at this. This gap is really nice in there. That's a very positive occurrence, and we think that that Barron's article helps, and we think that the truth is investors are looking for things with these kind of nice patterns, and we think they're going to chase it up. Now, interest rates started to tick up, and that's actually good for the banks because they've been dealing with a pretty bad interest rate environment for their earnings patterns. I want to call out Northern Trust, which gains 5% on the week, NTRS. So this, first of all, when you see the blue on the bottom, this blue cycle right over here, that's the XLF. And you could see how the pattern follows the XLF pretty nicely. So it's not a bad group stock. Here's your base that's formed in here after the big decline. Positively configured pattern in here and now turning up. Beautiful cycle action in the rising phase of the cycle, only 2 weeks into the advance. The probability is high. It's going to surpass 90, well, let's just say 100. We think that this stock warrants a positive bias, up 5% on the week. You can see it's not giving any ground, and I would say higher prices coming in Northern Trust. That's the best 5 for the week, and I think some good opportunities there, and I'm going to bring you now the worst. All right, for the worst stocks for the week, we're going to take a look here and look at one that we have featured quite a number of times recently, and that's Electronic Arts. That's EA is the symbol in there. And I have a lot of people write me about Electronic Arts, and they trade it. And it had a bullish pattern in here, and I'm pretty sure that some people have been looking at and saying, well, the stock's been a long stock. We expected that it would get back up into the sell zone right over there, that major resistance sell zone, before it turned down again. It actually just tickled the bottom of it and then gave you this big engulfing pattern. So just to give you an idea how candlesticks and cycles work together, you can see this cycle here peaked with an evening star. This cycle here peaked with an evening star. This cycle, which was extraordinarily weak, peaked in the third week with an engulfing in what we call a left-hand translation. It's when it makes its peak on the left side of the cycle and then has all of this time to fall, which is a long period of time. This gave a bullish cycle and was basing, in our opinion, and could easily get to this level up here at 108.60. It did not. It failed right here under the bottom of the sell zone, and now is giving you that engulfing. That says that it's very likely that this rising phase of this cycle has ended. It also says that it happened only halfway through the cycle. That being the case, it declines in this area through beginning of September, and that's why we have this negative projection in here. So while it looked like a stock that was bullish, at least for a little while in here, to get a little higher in that resistance zone, it has now said no, and it now says it's likely moving down. So you could see where the bottom of this cycle is right over here. That's at around $89. Were it to break that level, it would confirm the downside and would say that this stock is, their Apex Legends is not that big of a deal, and that stock is headed lower. Our projection now into early point of September is around $80 on the stock, and we think that were the stock to get upside move, it loses 8% this week, we think it's going to move down. There's a battle of the analysts right now, and bears are winning out, that's for sure, and that engulfing pattern then proves it to you. We're going to look now at some material stocks. Now, I've gotten some emails on FCX. Now, FCX is a bearish stock. As a matter of fact, you can see this cycle here made a lower low. This cycle made a lower low. This cycle made a lower low. Each of those. Every one of the big rallies on these weekly cycles failed. Now it's gotten here up into the sell zone and has started to move down. And copper is weak, and gold now is correcting at least. And this is a copper and gold stock, Freeport. And so it's gotten up here into this resistance sell zone and has begun to stall. They came out and warned of a loss coming up, and it's based on the weakness in copper. It hit that resistance, hit the sell zone, and yes, copper is a problem. And we don't think that there's a lot of upside left in here. Were it to try to move up again, maybe $12, but I don't see it doing a lot better than that. You can see our projection is for a decline here into late August or beginning of September, and we would call this a stock that just does not look good. And that's despite the fact that this was on my list in January of one of the best for 2019. That certainly looks wrong at this point, though it's up a little bit for the year. This is not really a stock that looks to me like it's going to be one of the best. Because staying in the category of materials, we're going to look at some foreign ADRs here. Rio Tinto down 4.5% for the week. BHP down for the week, and these are ugly patterns now. They have done really well. But now China is investigating, or their major steel companies, which of course they own, are investigating the pop that there was in iron ore, wondering if that's been manipulated, and we see a double top here. Now, look at this Rio pattern. This has got magnificent cycle patterns in it. And the dashed line is the DBB, so you can see how it follows the base metals in there. The DBB is the base metal index, so it follows it really closely. Now notice this peak actually right over here is an engulfing. This big peak is called an inside down, but it didn't give you a lot after that. This big peak is an engulfing right there. You can see that. And now you have this engulfing forming a double top. So that says to us Rio Tinto is in trouble and that it is likely to decline into the beginning to mid-October period. This clearly looks like a top to us. And even though it's got positive momentum, the momentum's been choppy in there, and we think the momentum is going to turn down pretty quickly. And that double top is going to be really a significant occurrence. BHP Billiton, you can see the same engulfing right over there. Not quite a double top. It made a higher high, but very clear cycle rhythms in here. You could see the minor cycles right in here, and then the blue one is the dominant cycle. And this dominant cycle right in here looks to be topping already. So the minor cycle comes down into September and then rallies again. You can see our projection into September on the downside and then rally again, but likely not get anywhere and then move down. So this we believe is a top. Also, same pattern, and all steel stocks are weak based on this news. And so the steels, the materials, they're just not looking great, and they're following copper, which is just not looking great. The last stock we're going to look at is TPR. Now, this is Tapestry. This is the old Coach. And look what it did. It hit that sell zone that we had right in there and then moved down. So the reason that's a sell zone is because notice that each of these cycles, the dominant pattern is made up of two minor cycles. Very clear. Two minor cycles. When the second one fails really early like that, that can fall for a very long period of time. You can see the second one failing right in here and under the sell zone. That sell zone created by our swing high, swing low analysis, and you can watch, I think there's at least 2 or 3 videos on that in our level 2 library of videos, and you can see it's just failing in here, and we think much lower prices coming here in Tapestry, as just the high-end luxury goods just is not where it's at right now. And that, of course, speaks to problems for Tiffany also. So that's Tapestry, really a bad pattern, down 3.7% on the week, and one that I think is a screaming sell. We'll look for prices that are probably below $25 and maybe much lower than that in this stock. That is it for the worst of the week and some pretty ugly stocks, as you can see. Be right back, and I'm going to bring you the short-term view for the coming week. All right, short-term view for the coming week. Got a little announcement here. Last week I showed you the beginning of our beta period for our new daily snapshot. This is meant for short-term traders, short swing traders, even day traders. There's great information in here. And I want to give you a little peek at that again, and then tell you about a special that we're going to have starting coming up later next week, where you're going to be able to continue getting this and then a ton of other information also. So let's just take a look here at the AskSlim website that you can see, and here is that snapshot in the website. Now we're going to open up this July 3rd version right there, and you'll be able to see that there's information in here on the S&P 500, the NASDAQ, the Russell, and the technical evidence comparisons, the momentum trackers between all of the 3 indexes. This is an unbelievable ton of information. I'm going to open up the technical view for the S&P 500, and you'll be able to see the explanation for the condition of the market and the important levels, and for information for swing traders, the upside overview that you can see right there, and a downside overview were to break through significant numbers, and then some phenomenal charts that you will see in here. First of all, the momentum, which tells you what we think the highest probability is based on the combination of studies we use over the next few weeks or the next several days. And in this case, it showed you that they were all leaning positively. Of course, the market ticked down now, and that will happen sometimes when it gives you this kind of information, but maybe not give up that much ground. And this is just a phenomenal look at a chart for traders that want to know important information each day. I'm going to blow that up for you. And you can see in here that this chart, which is a 15-minute chart, gives you these incredible levels and zones. So in this case, it had closed right on an important level that you can see right here. And above that is the acceleration breakout zone. It gets through the resistance and likely to accelerate. It just happened to really accelerate through there on this next day. And it tells you where support is, and then if it breaks the key level, if there is one at that point, it moves sharply lower through the acceleration area there. So what the purpose is to give the short-term trader the ability to maximize their winning trades and to get a good sense for direction looking at this. So there's a ton of more information that is available in here when you go beyond that 15-minute chart. Here's a 2-hour chart with some great explanations of what market conditions are, support and resistance on a little longer term, some other studies in there, and what we now have in here as our reversal scout, which really gives you a sense for the very short-term momentum in the markets. Just a phenomenal indicator in there. And you can see how that works. So you get through this reversal right in here, and it begins to move up. And when it gives you the little reversal right here, it begins to move down. And that's for the purposes of maintaining your short-term biases in there. So we have also included in here our daily chart with the all of my cycle analysis on the daily chart, and you will also be able to see my shorter term projections and important short term on the daily charts where the support and resistance are. In this case, it was calling for a market pullback over a short period of time, and of course that's what we're getting right there. We have all of that information in here in the NASDAQ and also in the Russell in our momentum tracker charts, which looks at momentum for the individual indexes. And you can see in here how the long term was all bullish except for the Russell, which is struggling. Intermediate term all bullish except for the Russell, which is kind of neutral. Short term and near terms are all positive in there, and it gives you our market condition indicator readings, and you can see 98, 88, and a measly 9 here in the Russell, which just gives you great information. And our market condition indicator, the rate of change in there, and when it's you can watch a video on the market condition indicator on our front of our page, and our 2-hour comparisons in here of the momentum, just a great picture in there to give you a sense for momentum. All of this incredible information here that you get updated daily. I mean, this will really help you tremendously with your short-term trading. Imagine having just a good sense of where the impulses could come on the breakouts or breakdowns. That's really key in here. And the odds are, when you have the indicators showing you that it's more likely to be up than down, you get a sense that, well, the impulses are more likely to be on the upside or downside. So you can get a good sense for how to bias your positions, how to be more aggressive, how to maximize your winning gains versus the amount of money that you'll lose on the losing side, and maybe even get stopped out less on one side than the other. So massively great amount of information. We have a special that's coming up. We've been beta testing it now. We love the condition it's in. Got great comments from users. Next week, starting next week, if you're not an AskSlim member or you're a level 1 member or a free member, then you'll be able to take this special. It's a 14-day special, $1 a day. It's 14 days, $14. You'll be able to see this for 2 weeks actually. And on top of that, binge watch in our 400 video library, because you get level 2 access, and you'll get our stock index report, our ETF report, a bunch of great information in both of those that I think you're not going to believe how much you get for $14 in here, and you're going to learn so much. So if you want to get that special starting probably Tuesday, Wednesday next week, write to Matt, M-A-T-T, at AskSlim.com. Tell him you're interested in that special. He's going to send you a special link to sign up for that. 14 days, $14, $1 a day. Amazing. Binge watch the library. You'll just have so much guidance in there and learn so much about trading, investing. Amazing amount of content in there. So please take advantage of that. Not an AskSlim member at all, no problem. Still write Matt at AskSlim.com and you will get that. Fantastic information. All right, now I'm going to bring you the information that you want regarding this short-term view for the markets. Do this every single Friday, and we look at the daily charts, and we're going to start out by looking at the light crude market. I like to be accountable to what I said in the last week. I'm going to give myself about a 60%, maybe a little bit better than that. The only market that we would say we were pretty perfect on was the gold market. We were going to get partial credit, mostly credit on the S&P 500, and partial credit on the bonds and on light crude and on the dollar. Pretty close on the dollar also, because we expected the bottoming and then it was going to, move up. So let's take a look here as we look at the light crude market. Here is the daily chart. Now again, we're looking at cycle analysis. So when you see the big dotted lines in here, as you see right here, what that is saying is that the bigger cycle is likely in a shifting condition. So here you can see the big cycle here, and it actually, the anticipated low period was right in here. But it came right in here, and you can see that was a full minor cycle shift. For those of you that are learning cycle analysis, it's important to be able to recognize these. And you really get, you can enhance that by seeing what happens in the next minor cycle, which set this up in a positive way, and therefore what we're looking for is another rally in here. So we're looking for light crude to move up. We thought last week it was going to be in a range of about 60.30 to 57.80, and it got right up over here to about 60.15, and we thought it would get down to 57.80, and it got a little bit lower. So we're not going to get full credit for that, because we did miss that low, and we thought it would be small up on the week, and it was down. So the only thing we caught in there was the top of the range, so we only don't get very much credit for that one. We're looking for, again, a potential upside move in here, and it could get all the way back up to 60. We're looking at the resistance right over there around 59.25, 59.5. So we think it's going to try to get up there between 59.25 and $60, and then roll over again. Now we have this drawn as if this dark blue cycle has got a lot of power to it. It might not, and if it does, well, we won't get a rally up as high, and it'll come down harder. If it doesn't, then it's going to easily get up to that area that we talked about of resistance up here over 59.25, and then not come quite down as far 2 weeks from now. So we're going to call this an up week. Momentum is still positive, and here, as you could see, where the slim ribbon has turned positive and these bars are green, the volume bars are green, that's how it shows positive momentum. And so we're expecting that we're going to be able to use this buy zone to give us some upward trade in there. It calls for a long bias for the week. And then after that, we think we're going to get into a little bit more risk. The gold market, for our people to get our charts, we updated this a little bit, as this looks like it's extending out the corrective period to the actual ideal low, which was coming right over here. This low was a little bit early. It tried to rally, hit resistance, and pulled down again. We're looking for a little bit of downward chop in this upper buy zone, and then getting ready to move up again. that would mean, of course, that you'd need the dollar at least to slow down or to get backtrack the gains that it had to get any kind of decent gain in here. So we're going to look for this buy zone to be valuable that we see in here, and that dipping to around the area of about 1380 would be a very nice opportunity to be buying and looking for, as you could see, this upward trend that we're expecting to resume in there, getting to even higher highs. So a lot of chop going on in there right now. Clearly, momentum super strong, as you can see how wide the slim ribbon is in here, and getting that 13-day moving average support right there, as it often does. You could see it did it right in here and then moved up. So right in here, we think the slim ribbon is going to give it support, and it will be moving up again. Dip early would be, in our opinion, a buy. We think the dollar sign DXY, entering a choppy period in here likely, where it's digests some of these big gains. Now, this is where we were looking for the dollar to bottom, and on the weekly chart also. So we projected it positively because we thought that the weekly had bottomed, and it certainly did, and we got this big upside move. So we have this minor supports in here that are rising right now, and we think we're going to be in a very wide range choppy period. Well, maybe it's not that wide a range, but between the area of 96.80 and 97.80 right up over here is probably where we're going to see a lot of back and forth movement. My guess is that on days that this moves down, gold is going to be able to get some spikes to the upside based on the pattern we're seeing. Again, I think all of this in here lives in a final rally before the market moves down pretty sharply in the August period. You can't really see that on this chart. So for the moment, we're just going to look for wide chop in here. We're going to look for a small down week, opposite of what we think in gold, which we think will be a small up week. And that's not going to be, I think, anything really tradable on the downside in there yet. I think it's too early, even though we think it's going to move down. So we think big 3 or 4 weeks of some pretty wide movement in there within that penny that we see there, 96.80, 97.80 looks like the range. The bond market, which moved sharply lower on Friday, get that up here, /ZB. We're looking at the 30-year in here. We expected this to be topping on the weekly and on the daily chart, and you can see in here. So our projection is that this is going to decline all the way into late July or beginning of August. We thought that it would be peaking in this level. Last week we thought that it would get up to 56.16 and drop off to about 54.06. Well, it got higher by about a half a point, and then it dropped down to within just a few ticks of the area we thought it was going to come down to. So this was pretty good. We thought it would be small up. It was throughout the week, but now it's small down. We get more than half credit for this, and now we think it's going to be chopping its way down. We'll call for a down week. As you could see described in here, we would sell attempted upticks for day traders and think it's going to get down into this area. Our targets for the next 3 weeks are really 53.12 all the way down to 51.12, which is down over here. So all of these fib support confluences are, are areas of support. 53.12, this one right here 52.14, and but down here about 51.12. So we think it's going to work its way down there after these big gains. Now you could see the slim ribbon. I mean, it is just powerfully up, and the market's trying to roll over in here. You're not getting much momentum. You're not getting it to give up much momentum. Were it to get underneath this key level right over here, it's about 54.06. That to us would be a breakdown, and we have that noted in here. Cycle low support breakdown is negative. If that happens, then you would expect that this downside correction is pretty much in place, and that you're going to be able to get down to those levels that we speak of in here here over these next 2 or 3 weeks. So we expect that the bond market is in correction. I'm giving you a little peek of the weekly chart, and you can see we were looking for that to correct and come down to those levels we discussed based on the intermediate. When you have the intermediate aligned right in here and the daily aligned right in here, it's a pretty good odds you're going to get some good downside moves. So they'll give you a little sneak peek there of what we show you when we look at future speak on Wednesdays. So now let's talk about the stock market. So the stock market pulling back here on Friday on some strong payroll numbers and the likelihood that the Fed will back off and not cut rates in July. So we had this pop in interest rates, jump in the dollar, decline in gold, all of that, and that brought some selling in the stock market. It's really at the right time for a little bit of a pullback in here, but we don't think it's all that meaningful, and the market is doing everything it can to save itself here on Friday, as the S&P 500 was down about 24, and now it's only down 11 here at midday, and this is shows you the kind of strength we have here in the market. Let's just look at this, and you can see this pattern that we're looking at. We're going to call this coming week in here a choppy lower week, where that 29.95 level, 29.96 is going to be a little hard to surpass right now, and then it's likely to get down into the support area. So we're looking at the minor cycle right in here, and you could see that rhythm going on, and that calls for a little minor decline into mid-July, and then moving up sharply again. At the beginning of the show, we talked about 30.32 is an important level. There's that 32 extension right there from the weekly chart, and that looks like end of July, and if it doesn't quite make it end of July, then here you are into somewhere around the second week of August that it's likely to make it out over there. So beginning of the show, we said July, August, and that's where it comes from. We think that the next week and a half is likely to be choppy, get into the minor supports. Every time it gets in here, it's a buy. Note the slim ribbon, extremely powerful, how it rides it on the upside, and that gets into this minor support zone. So that's really the areas that you would expect it to be able to make some upside progress if that happens. So every time it gets into minor support, every time it gets into the slim ribbon, right now, while we're in this positive condition, you have to expect that it's going to move up. We're going to call this a mild, choppy down week potentially in here, getting into those support zones, and then move up again. Maybe test this area of 29.52 to 43 down over here, 52 to 43. That would be the worst case that I could see. Maybe it only stops down at 29.65 here. This morning it got down to a level of about 29.68. So you see, we're not looking for a lot more downside in there, just some mild indigestion or digestion of the upside move before it begins to move up again to that 30.32 number, which is our present target at the time. That target being the minimal upside that we see here in this positive phase of the market. Hope that was some great information for you, and if you have any questions about our that special, make sure you write Matt at AskSlim.com. He'll let you know all about that. Just a fantastic deal, 14 days, $14, and you get all of that we described. And watch so many videos that will be able to teach you so much about trading in 8 different categories: trader psychology, analyze stock sectors. We do things on IRA MOs for longer term traders, and of course future speak, market week, and just so much more. So do spend a lot of time on those videos, because I have creating them, and I think you'll find them incredibly valuable. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city show.